What's going on, world? Welcome to another edition of Insightful Principles. This is episode 47, and I'm here with a special guest, Alex Cole. This is a great individual I got a chance to connect with on social media with one of our mutual friends, and we have a very enlightened conversation for you all today. Alex, he actually has a background in insurance, sales, real estate, and also with investing in the markets. He also has experiences with investing in cryptocurrencies. So we're going to have an enlightened conversation around blockchain. We're also going to talk about how you can prepare for the next financial crisis and some of the assets that you can start to put in your portfolio to give yourself a hedge. And also, Alex is working on his MBA, Master's of Business Administration at Indiana University. So we'll get a chance to talk on that as well. And if you all can continue to like, subscribe, and share this video on the YouTube. And if you're listening on a podcast, if you could leave a review, subscribe, and share, that also would be greatly appreciated as well. With that being said, Alex, I appreciate your time for coming on the show. And how's it going today?
Thanks, Kevin. I appreciate that. It's good to be here, and I appreciate the invite. It's going to be a very good conversation. I'm excited for it.
Of course, I'm glad that you're here. Now, to get things started, can you share with the audience a little bit more about your background and some of the experiences that you've had that have gotten you to where you are today?
Yeah, absolutely. I won't try to get too deep into it, but I kind of start where I'm from, where I began. So really, just born in the Midwest, grew up in Cincinnati, Ohio. Typical, middle income family. Kind of bigger family, one of five kids, and four of those being boys. So I'm one of four. Kind of that competitive nature growing up. Always, fighting and wrestling, playing sports, getting in trouble and stuff. So that was good. That kind of enhances, my competitive nature already. But I spent most of my young childhood there in Cincinnati, playing sports and doing that fun stuff. And then throughout my high school years, I went to Indiana University to visit my brother. He was going to school at UC, University of Cincinnati, and then he transferred to IU. Didn't have any ties to the university or many friends there, and he kind of paved that path for us four boys to go there. So I'm one of four kids that actually all went to IU historically. It's kind of cool there. So I went to visit, and I fell in love with the university. From a campus standpoint, it's beautiful aesthetically, but it's got a great academic program for business and other colleges there. And then also the sports, can't go wrong with those Hoosiers. They've always had a pretty good basketball team over the years, but they've been struggling recently. So yeah, I spent 4 years at IU. I studied management in the business school, and then throughout that academics, I didn't just go to school. I spent time with friends and typical college experiences, but then going to school off loans, I had to supplement some of my income by working. So there was times I would do studies, like some of those research studies to the psych school. You $50, sit down and mess with the computer program and calculate your responses to questions. I did there's various psych studies and stuff I did in the university together, some extra income, and then also I worked at a bar. So I've always kind of had side hustles throughout my years, but it really taught me a lot of things. It's not just, some kids go to school just to go to school and party and then get the degree when it's, 4 years is up or five. For me, I was paying for my own school via loans. And so I knew that was an investment I was making at that time in myself. And so I think kind of realizing that and the money I was putting towards it helped discipline me and kind of focus on, okay, what am I doing? How can I optimize this money? I got to pay for rent, I got to pay for books, I got to pay for food, but I also want to have fun. Those loans didn't go, as far as I thought they did sometimes. So I had to, work on the side. And so that bar job was a good way to supplement my income. But it also taught me some time management too, because many nights there was, I'd work nights or weekends. And so instead of going out with friends, I have to work on occasions, work those nights I don't always want to work, but bars close at 3 in Indiana, but you don't get out of there till typically 4:30 or 5. And so You got to restock the bar, you got to clean up, count the money, and all that type of stuff that goes in with preparation, for the next day. And so many times I was there late, walking out with my coworkers, and it's 5:30 in the morning, sun's coming up, and I've got class, Thursday or Friday the next day. Got to somehow wake up in a couple hours, go to class or finish a paper. But it taught me a lot. It really taught me time management, how to use my time wisely, my resources when it comes to the money that I made. I really think it provides a good balance, instead of just going to school and having the option besides class of just partying and having fun. So it taught me a lot. I think for kids that don't get that experience, they don't always understand the balance of all that, but it can be rewarding in that aspect. Let's see, after college, I moved back home to Cincinnati. I started working for an insurance company called the Cincinnati Insurance Companies. Don't have a background in insurance, didn't go to school for it. Really no ties or connections there from my family, but my dad's friend did work there. So he's the one who recommended me the job. But it wasn't like I was an agency kid, growing up with some of my friends who their dads have agencies and a book of business, and they have goals to be a producer, but they want to get that, career experience. For me, it was just, okay, it's my first job out of college, entry level pay. Let's just, find a way to get some money coming in. So started out there in 2013. And I didn't think I was going to stay there. Quite honestly, I thought, I was going to eventually pivot to the marketing side or the financial side. But, 8 years later, still at the company. I worked my way up through the ranks, and I ended up being in the sales department. And so I kind of knew if I ever got to sales and had that chance to be on the front end of the business on the new business side, I may stick that out. So 2 years ago, I jumped into sales, and a couple positions opened up across the country. I was looking at a territory in Arizona and then one in New York City. And I thought, hey, I know Arizona, got friends out there, but I think New York City is kind of that place for me. I like the fast paced, lifestyle. I like being the financial sector of the country and the world. Let's take that opportunity to go out there. And so went out to New York City, helped open up the territory for our company. We've been around for 70 years. We've been in upstate New York 30 years, but never in downstate. And so I had a chance to come out here and help build a business, start building that brand, appoint agencies, grow the book, hit my sales goals, and kind of help with my team develop our other counterparts and kind of grow their training. I've been a mentor for other sales and field reps, help develop some of the guidelines and territory specifics. So all that being said, there's just so much. It's not, to me, it wasn't just sales and marketing. It's you're wearing multiple hats. From the production side, you got to know the quantitative analytics and the background of the, what losses and the, profitability side. And so really it's been a way to see the business in a whole new light by coming out here. I don't regret it for a second. It's been good to be out here, and the goods and bads of New York this past year. With the pandemic, obviously things aren't always great, but during these tough times, you still see the city shine. It's kind of cool to see the energy as it wakes back up. So that's kind of a quick spiel on educational background, some of the professional experience I've had, but I know we're digging through some more as we go. So
yeah, and I appreciate you sharing your journey a little bit, and we are going to progress through some more of those experiences as we dive along this conversation. And I can agree, with a lot of your background, and can relate also as well. I'm born and raised in Michigan, West Bloomfield, Michigan, but I did most of all of my undergrad was in the Midwest. I went to Bowling Green State University, studied sport management, and I totally agree with you from the standpoint of college teaches you a lot of great things. And I would say for anyone that has the opportunity to go, it teaches you a lot about discipline, responsibility, accountability, time management, like you mentioned. And I think that for me, I also took out, I got scholarships, but I also had to take out loans, and it does something to you where you treat everything more seriously. You realize that every class that you take is very important. Your ability to succeed in those classes, making sure that you have a work-life balance. I worked during school as well because I had to make sure that when my meal plan was gone, how I was still going to put food in my stomach. So it teaches you a lot of things, and I love the experiences I had at Bowling Green. It's a great town and just a great place. And speaking of when you talked about insurance, what line of work does your company? What type of insurance is it? Because I know I went and got my life insurance license, but I'm curious to want to know like what type of insurance do you actually specialize in with the company?
Yeah, so the company itself, they write all lines. So they got
Okay,
commercial department, personal lines department, and then we also do the life and the health side as well.
that's good.
We have a bonds, management liability. We pretty much hit every sector of what they cover. Personally, I'm on the commercial side,
That's
so
good.
I'm writing the stuff out in Manhattan, the office buildings and the hotels and the restaurants and breweries, that kind of stuff. And so I handle commercial in New York. I do have a personal lines counterpart, and they kind of handle all the residential stuff from auto to homeowners insurance. But our company as a whole does write all lines. So
So the commercial, take me through from a standpoint of when you say it's commercial insurance, are you buying insurance for the building or the people that work for the commercial? I guess I'm trying to understand like for the insurance, like what aspect of it is when you're underwriting something for a commercial building. What is that process like?
so yeah, to your first point, it can go both ways. We can insure the building owner. They could just be the real estate, owner of that property and multiple. But also we write insurance for tenants too. So it could be, a doctor's office, but we're actually writing it for the dentist or the doctor or the veterinarian in that office.
Okay.
Um, in New York City, it's a lot of real estate
Yeah.
naturally because it's a big real estate market. So we see a lot of, Lester's risk schedule where we're writing the building owner, not the occupant. And then we see some
Yeah.
stuff where it's occupants. It could be a, mercantile retail establishment, like clothing store. It could be software company to restaurants to anything that typical business occupant would fill up in that space. And so it goes both ways. And it's not just the property. We write the liability for it, the general liability, the auto, the work comp, any kind of cyber. There's some cyber and crime on there too. And so it's a
Okay.
multi-line position. So it's not just a specialized silo of one line of business. It's multi-line is what we do. So
Okay.
kind of get to see all sides of it. Kind of interesting.
Yeah, it
Sure.
is. No, that makes sense. I understand where you're coming from. Now I did want to touch on. I know right now at Indiana University, you're working on getting your MBA, and I actually was able to go through the same process with my MBA at Florida Atlantic University. And one thing I can say that I'm proud of with my MBA is that it really teaches you how to run a business, and all of the elements, the management elements that go into running a company, whether you're looking at the marketing, the finance, the supply chain. It gives you a very broad overview of how all of these areas align. And I would love to get your perspective on, so far with what you're learning in your MBA program, how has that assist you with your line of work in insurance and also with the business ventures that you're doing on the side as well?
Yeah, and absolutely. Um, I can't say I'm too far into it. I just started, this year.
Mhm.
It's been a goal of mine since obviously, for me, leaving, in the university as undergrad, I've always wanted to get back and, go up to my MBA. Um, didn't do it until 8 years later because of time, and I've taken some other insurance related tests. So pretty much after leaving college, I've been obtaining designations and working on other educational um, testing that has applied to my specific industry. And so
Mhm.
I just finished up my CIC, which is my final. It's like a five test series that you get for like if you're a licensed producer or an agent, you would obtain that, and it's 5 different courses, ranging different topics. And so that was kind of the final designation I got last year during the pandemic. And so I thought, hey, like I'm done with that now. I just turned 30. Like let's go ahead and just pursue that MBA. It's still kind of a weird time. We're working mostly virtually. Like what better time is it to take some classes and kind of get that started?
Mhm.
It's not going to get any easier as we get older. Have kids and life throws stuff, other stuff at us, so we might as well just start it now. And so just started that. So I'm 3 classes in. But you honestly, to your point, like everything I'm learning to this day, I can tell that it's way more applicable now than it was back then. If I'd have took, my MBA right after college and pursued it, I wouldn't know how to apply it to my industry. I wouldn't have any professional experience or, marketing experience, anything to apply what I'm learning to. And so waiting those 7, 8 years, kind of working up the professional ladder within my organization has, for me, been, I think, a good call on my part, because now it hits home and it makes more sense. And I actually worked for a startup company back in college. My sophomore year, one of my friends approached me and said, "Hey, do you want to join my team? We're starting this company." I didn't know much about it. Just an undergrad kid, at that point taking electives, didn't have the experience or any credentials. But now, kind of stepping forward to this MBA, I can tell that's going to be the knowledge I'm going to learn from this is going to help me, teach me things I didn't know back then. For a startup company, when I had to, meet with an angel investor or work on a marketing plan or, do some business development or, run the financials. I just didn't have those classes on the undergrad side, didn't apply like this is going to, moving forward. So kind of a, I don't want to say counterintuitive approach, but I kind of put the experience before the MBA at that point in time. But, that's just life. You kind of jump into things and you take advantage of those opportunities. And, that startup company was a great experience. To this day, we raised some capital funding, some seed funding, A and B rounds, and then use that to build our platform, develop a product for our internet-based company. It's not currently, we're not working on it. We kind of dissolved at that point. We had some traction with sales and clients, but it's just the experience that you get from something like that is, you can't put a value on it. I mean, I learned so much just by being in that position and having this opportunity. So I'm excited about the MBA. I'm excited to get 2 years into it down the road and use this moving forward to eventually get back into starting my own business on my own or with friends or work for a startup. I think this is really going to help, because that is my end goal, is to get back into that startup world or just be an individual business owner. So
yeah, and that was definitely my intentions, and when I was getting my MBA, it's just knowing that my end goal is to uh continue to build a financial service business for myself, and being able to learn all of the different aspects that go into what can help me with running my own company. So even now with me working in the financial servicing sector for Fidelity Investments, getting a lot of great experiences with that. And it gives you, the experience is so important while you're getting the MBA. Because even while I was getting my MBA, I was working at Enterprise, in management with them. So I was able to apply things firsthand as far as looking at financial statements, looking at the balance sheet, the income statements of our branches, and seeing if we're profitable. So I just think that it's a great program that you're going to you're going to experience, and it definitely is helpful. I could agree. It definitely to what you have explained. And I wanted to transition this conversation and really talk about the theme of this episode, which is really preparing for the next financial crisis. When I think about that, I look at, as an investor, it's smart to have assets in your portfolio that can give you a hedge. And one specifically, I would say, is cryptocurrencies. Can you explain how these assets essentially provide and hedge against the downturn of what could happen in the economy?
yeah, absolutely. I know it's a brand new concept, and yourself being in the financial world, I know Fidelity is adopting some of that stuff.
Yeah.
So it's new. It's crazy to see, this financial transformation of how things operate, how wealth is, how money is moved, and things are transferred across the country and the world. It kind of all started with Bitcoin back in 2008, and it came out with a financial crash. Bitcoin was born after 2008 in the housing market crash, and so that's where this whole thing started. It was a hedge against the banks,
Yeah.
against inflation, against us as individuals not being able to control what's being, going on with, fiduciary spending, with inflationary, decisions.
Mm-hmm.
Um, all of us, our money is tied to the banking industry and the financial industries. And so, having your money in the bank, there was a point in time where you couldn't withdraw. You're capped at a certain amount. And as the stock market crashed and things dropped, you were just kind of left, stranded with, essentially fiat currency paper that, it has a value, but it wasn't what it was, the
Yep.
year prior, 2 years prior to that. And so
Mm-hmm.
that scared a lot of people. I mean, my dad, he's in real estate still, but he was flipping houses with his partner. And that was his full-time job. He was buying houses in Cincinnati, rehabbing them, flipping them, buying them either repossessed from the bank or foreclosures, investing equity into them, and then at the same time doing 5, 6, 7, and just flipping them back over. But then the housing market crash happened, and so that's kind of where my love for real estate started, was through that. Seeing him do that, and I've always wanted to get back into it. But then seeing what he also went through on the flip side of that coin, of having properties that he couldn't sell, sitting on these loans, or these, properties that are just basically just sitting there waiting to be bought, paying taxes on them, paying for the insurance. It really set him back financially. And so, just seeing that happen, kind of, to somebody who's actually impacted in that specific market, the crash, but then also the years to come past that. I mean, everybody was affected by it. Your 401k, your stockholders, stakeholders, everybody had an impact that was negative at that time. And so, out of nowhere, Bitcoin, this thing called Bitcoin, what is that? It's the cryptocurrency. Like, what's the value of that? Speculative. No one even knew what it was. I mean, I remember being in college and a kid come up to me at a party saying, he was like, I'm trying to raise awareness for Bitcoin. I'm trying to raise awareness for Bitcoin. I knew it started with, the dark web and all this other crazy stuff, but I'm like, Bitcoin, what is that? And I should have listened to him. I should have bought, when it was $1, $5, whatever it was. But, that's when I first heard about it. And it was a phenomenon. How can we redo the financial system? How can we even, value this transaction, this ledger of information? And so that's what it is. Bitcoin is a network. Yep. And like all cryptocurrencies, it's a network of information that is encrypted by data blocks. And so what it does is it breaks down information, creates blocks in the system to secure that information. And then the network itself validates that information. So it can be from, we're talking, it's blockchain technology can be applied to any industry or any, market out there, from healthcare to supply chain to finance. We see, decentralized finance happening as we speak.
Yep.
But that's not where it started. That's where we are today. But where it started was just Bitcoin being a form of transacting money across the internet. Mm-hmm. It didn't have a use outside of that. It wasn't used for supply chain. It wasn't used for any kind of information systems. It was really just to transact money across the internet in a quick way. Back in 2008, 2009, we were still using checks. We're still using, putting in a payment transfer through a bank that costs, quite a bit of money, and it might take a couple of days to hit your account. Whereas Bitcoin, you're sending that transaction across the internet. It's hitting not instantaneously back then, but it's pretty quick now. And so that's where cryptocurrency started. Now fast forward to 2020 and 2021, they were at today. The adoption is incredible. We're seeing everything from banks adopting it, financial institutions trading it, companies exchanging a balance sheet, like MicroStrategies, who's got, it was 650 million, now it's close to $1 billion in Bitcoin holdings. Like Elon Musk, you buy exactly. You buy a Tesla with Bitcoin now. We have ATMs in New York, Bitcoin ATMs in New York. You walk up with your phone, scan that QR code, get cash out. So it's just crazy to see that. That's how it started. It started from a hedge against the banks, against the crash of 2008. Gold is that other hedge. We'll talk about that in a little bit. But, this was a new form of a gold standard in a digital era that we live in, where things are done on our phones, done on computers. Things are ultra fast with, high frequency trading. We wanted that the founder of Bitcoin wanted a faster form of payment. And so that's how it all started, pretty much. And that's why we're here today. And that's what cryptocurrency is, the internet standard of gold, is what they say. By any means, I'm no expert in in cryptocurrency. I've been in this since 2017, investing, researching, learning, self-educated. I'm actually going to the Bitcoin conference this year in Miami. I was invited the last 2 years from my friend who works for the company, and this is my first year I get to go, so I'm excited for that. But just constantly educating. After people who listen to this podcast, I would advise just to go out there, just research. I mean, this term and this phrase is not going away. People thought it was going to die. 2017, we had that big spike and that dip. Everybody said Bitcoin's dead, cryptocurrency's dead, it's not going to work. Quantum computing is going to take over and disrupt that market. Well, here we are today, and it's not going anywhere. So I would, it's a way to just hedge against inflation. That's kind of where we're getting back to that same question. But it's not tied to fiat like the stock market is. Even when you have, you're investing in a company, you're a stakeholder in that company, you're holding their shares. They can still go up even in financial downturns. But it's tied to the dollar. It's tied to the USD. When that market, when the USD drops, it's going to pull the market down with it. Even housing, you see the same thing with the real estate market. Your house is worth $200,000 today. During that 2008 crash, I mean, the notes owed on those houses versus what they were worth at that crash. I mean, people lost 100, 200,000 equity in that house, or it was cut in half. And so that note on that house became underwater, essentially worthless. And so, Bitcoin is completely untethered to that. It's a separate avenue, just like gold, where it's, if the market goes down, it's either going to hopefully stay the same or go up, because it doesn't have that. It's not tied to our economy. It's not tied to one country, one company. It's the whole world transacting on a network. So
yeah, I mean, you're absolutely right. I think for all my listeners and viewers out there, this decentralized technology is not going anywhere, and you have to become aware of this is FinTech. This is financial technology that is only going to evolve. And I think that as an investor, you have to look at this technology because, like you mentioned, you have banks, institutions, you have companies, you have ATM machines, Bitcoin ATM machines, where a lot of people in the world are understanding that this is going to be the norm, and you don't want to be the individual that didn't do the research, that said it was a fad. And we look 15, 20 years down the line, and it's just constant growth. So I definitely think that doing the research is important. And speaking of Bitcoin, another crypto that I think that has excellent potential is Ethereum, because they implemented the idea with the smart contracts with their technology, which a smart contract is pretty much a contract between a buyer and seller, with a specific code that is written that they only know, and is pretty much within a distributed, decentralized blockchain network. So I think with the smart contracts is really is very unique and different than what we have seen with our current financial monetary system. So just the whole blockchain network as a whole is a hedge against what we are used to with our financial institutions that we've used in the past. So I definitely think that I've only been invested in it for only a year, and I think that I'm continuing to learning, and I'm not an expert at all, but I understand that this is technology and a financial asset that has a substantial value that will only increase in the future. And I wanted to also ask you, like, what are some resources that you use for like fundamental and technical analysis with crypto?
yeah, of course. Real quick on the Ethereum thing, I agree 100% with what you're saying, because Bitcoin came out as just a form of payment. That's what it was for. It's got a complete value of what it is at the moment, but it's also a store value in a capped supply.
Yep.
And there's only 21 million Bitcoins that are going to be mined, and so we're at 18,500,000 something at this point. And so once that gets to the max of what's mined, it's going to be a fractional amount. So a Bitcoin, you don't have to sell a whole Bitcoin. You can have 1/10 of a Bitcoin, 1,000 of Bitcoin. It's just going to keep on rising that value because it's capped at a supply. But Ethereum is the better option in some aspects because it has usability
Yep.
that Bitcoin doesn't have. I mean, Ethereum, it was developed to be a network where, banks can use it for decentralized finance. You can use it for smart contracts. You can use it. You can build upon that platform in your organization to transact information and move money around. Whereas, Bitcoin kind of has that one functionality. Ethereum has multiple, and we're seeing it every day with, NFTs and all this crazy stuff being built on that platform and that use. And so we won't go down that path. That's the whole of the story. It's a new craze, but it's just fascinating to see this happen. I mean, we're living in a time that, it's like, obviously speculation, the skeptics. I was, at first, I'm like, what is this? I own it, but it's not, I don't physically hold it in my hands like, cash or gold. But it's hard to ignore now. It's very hard to ignore at this point in time. Resources I use to kind of get started. I actually started trading Forex. That's kind of how I got into the fundamental and technical analysis. My friends had some friends that were trading Forex. I jumped into it. What that is you trade currency pairs. It could be the yen versus the dollar, the British pound versus the yen. And so you're basically trading off the technical, so the patterns in the charts, watching, looking for those indicators, what you see happening, and then the fundamental of that would be the news coming out. It could be GDP reports. It could be, job analysis.
Unemployment rate.
Watch this information, correct, and just use those two things together to make a decision where that's going to go. That currency versus the currency you're trading against or with. And I learned a ton from that. That was probably the best decision I ever made. Was I wouldn't say I made a lot of money from it. I definitely profited, and I enjoyed the fast-paced trading. It's a very, very tough trade because that market moves very fast based off news. But I learned patterns. I learned charting. I could graph charts and see, indications of patterns forming, and then know what's going to happen next. And so I was using like Investopedia. I was using if somebody CNBC has investment side of it. For that specifically, I use Forex specific stuff. But currently with crypto, I'm using like Cointelegraph, CoinDesk, Cryptopolitan. There's CNBC crypto now. I mean, CNBC came out with their own literally crypto segment on their website. They've got videos, they've got charts, they've got the latest articles. You can turn on CNBC, the news source. And when they do the market segments in the morning, they talk about Bitcoin every day. Like they're talking about the moves of Bitcoin. And so, you can't really ignore it now. I mean, it's on social media, it's on the news, the internet, but seeking it out, just quickly going through these sites, like I said, Cointelegraph, CoinDesk, that kind of stuff. Those are specific to crypto. And so that's how I read kind of what the analysts are saying about these certain cryptos, about the charts, and the market as a whole. So those are kind of my go-to sources. But there's plenty more. I can't say there's one that I lean on heavily. I kind of just browse whatever comes up.
Yeah. Now, what as far as trading platforms, for someone out there that wants to get into cryptocurrency, but they want to know what are some good resources, maybe explain something that you first started on. What are some good platforms to actually trade and invest in crypto?
Yeah, absolutely. Well, things have changed a lot. Some of the brokers I used back in 2017, 18, they either, they're still here, or they just didn't, they didn't keep up with like the better technology or the more user-friendly platforms. So I've switched over time. One of the originals I've used and I still use is Coinbase. Kind of timely conversation because they IPO in 2 days. 4/14, on Wednesday is their IPO date. So that's a big day to have our first, cryptocurrency brokerage IPOing. And they're just, I mean, look at their financials, they're killing it. Everybody's involved, their account usage is like doubling. It's nuts to see. I would say it's probably the most user-friendly application. They've got the website platform. They have the phone app. It's very simple to use. It's easy to connect your bank account to and deposit funds. It's very aesthetically, pleasing and easy to look at the charts and the currency pairs. I would definitely recommend that one. I also use Binance, which is a big one. It's been around forever. I use different ones because not every cryptocurrency is available on every platform. So I had to get creative and open up accounts on Kraken, Binance. I've used other exchanges to kind of pull the cryptocurrencies I want to invest in. But I believe with this IPO with Coinbase, it's going to completely open up the door. I mean, they've been adding new
Mhm.
cryptocurrencies every week, and so I think once they IPO, we're going to see pretty much the big major ones that I would invest in on there. And so I will consolidate at some point. I got a hard wallet too, where you can pull it off the network and store it on a cold storage hard wallet, but I keep most of mine on exchange. So it was kind of my go-to. I'd say Coinbase. If you're brand new, I'd start with Coinbase. I'm guessing that's probably the ones that you want to start investing in. I
Yeah,
do some of the major ones, also some of the smaller ones, altcoins.
yeah,
Um, Based off their use and functionality, I'm looking for certain segments, whether it's esports, casino, gambling. It could be supply chain. I look at the healthcare industry. If I can't find what I'm looking for on there, I'll go out to other exchanges and transfer them to a wallet. But for beginners, I'd say Coinbase. Then
yeah.
get a little creative on these other ones.
Yeah, Coinbase is that's the one I'm currently using. I haven't, and I've heard of Binance. It's another great platform because, like you mentioned, they have a little bit more cryptos as well. But I definitely think that Coinbase is an excellent one. I know you mentioned to me Crypto.com was another that a couple of people have used in the past. And that's one I want to check out as well. So yeah, I definitely would say just kind of do your research and make a informed financial decision and use these platforms. And I think with Coinbase getting ready to IPO, that's actually one potential company that I'm looking at investing in because I see the demand for so many people using the platform. And I wanted to get your opinion on what are some cryptos that you see have potential. I know some that I have recently invested in. Cardano is when I looked at the uses for what they're doing, they're pretty much trying to do similar things as Ethereum with their blockchain. Chainlink is another one I recently invested in, but I know you have some other good ones, so I want to kind of hear your opinion on some ones that have potential to grow in the future.
Yeah, of course. I'm very bullish on Cardano. The founder actually came. He worked for Ethereum at one point in time. He started Cardano, so he has the knowledge and the infrastructure of what is needed. And it's truly one of the first. Cryptocurrencies are decentralized in the sense that you can pull them off the network, but they're trying to be the first 100% decentralized, ununiform, type database and currency. And so the network is already being built as we speak. It's not that they're just not there yet, so the price is completely suppressed and cheap. It went from like 20 cents over the last year up to about 130, 140. It's currently sitting about that on the 130 range. But they're just getting started. This is like a pre-IPO if you think about it, because they're just on launching the smart contracts. They had the Mary hard fork that happened back in March. And they're just getting their platform and their blockchain network launched. And so that's one that I would definitely recommend. The price, doesn't indicate the value. The value it hasn't caught up yet because it hasn't even been, utilized yet. So with the gas fees of Ethereum, those gas fees, I'll break that down. It's when you send a transaction over Ethereum, there's a fee that's incurred, and the network's got kind of congested. It's using a lot of power and energy, and so at this point in time, the gas fees have skyrocketed. And so Cardano is kind of stepping in along with Polkadot and some others to, kind of grab that market share, pull users in, not just from an investor standpoint, but from an adaption and a build out phase. They want to take some of the companies and the users that will build onto their platform and kind of expand that. So I'm still big on Ethereum. I bought in back in 2017. I bought quite a bit last year when it was 100 or so, and it's up to past 2,000 now. And so, that's one that I think it's endless. They're saying it could possibly flip Bitcoin. I don't know if that's, the case is going to happen, but
We'll see.
that we will see. That network is outstanding. I can see where they are going to grow. I don't think they're done growing in 2000. I think it's got a long way to go. As they got the proof of staking coming out right now. The gas fees are high because just the way they have it figured out now is that it's concurring fees. Once we go to proof of staking, Ether 2.0 in the next year, that's going to reduce those fees pretty much down to ultimately nothing, and speed up their network. And so that's going to be the next boost of Ethereum. But you've got Cardano. That's a big one that Kevin mentions. Also Polkadot, similar to Cardano, it's a network that is being built. I'm excited to see those guys at the Bitcoin.com, the Bitcoin conference coming up. One of the founders actually went to IU, head of marketing, so we're gonna connect with that guy. But Polkadot, same thing. It's hovering about $30. Like that's nothing.
Yep.
You look at the price of Ethereum, look at the price of Bitcoin. Some of these are just coming out, and not to say Bitcoin's old and kind of just slow. We have had better technologies come out since then, and I think some of these other ones will have chances to catch up and still some of that market share. So those in that space are Cardano and Polkadot for me, and Ethereum. When you get down to like supply chain, I'm very bullish on VeChain. It's been around for a long time. I invested it back in 2017 as well. It's grown substantially, but I mean, it's dirt cheap. It's around 13 cents. Like, I mean, it's pretty much like a penny stock in the scheme of cryptocurrencies. And the use cases for it are incredible. I mean, it can be adapted to any supply chain, from manufacturing to healthcare to, it could be a drug recall. It could be anything that could be attaches to those sectors of the supply chain, industries. They've got functionality now where on VeChain, as a warehouse supply goes down to a certain threshold, they can have the network, kick out, hey, we need to order 1,000 more pallets of this widget, or we need to order X amount of this product. So they can build that network into their system to allow it to automatically or automate their supply chain system and reorder a certain material, a certain product. I mean, it's endless. It's absolutely endless, and it's dirt cheap. So I'd say VeChain is one of them. Big fan of kind of the transacting type cryptocurrencies. And those spaces, I see Ripple, I see Stellar. Obviously Ripple had that little dispute with the SEC. It came out, they won that battle. So that's a big win for, cryptocurrency. They try to categorize it like securities and all this stuff. They threw this stuff at them, and Ripple stood up and they fought it and they won. And so that's not one that you can't find very easily at the moment. It was delisted from Coinbase and Binance and a lot of these platforms, but I bought it early. I've got a bunch of it, and I think it's going to be definitely relisted soon. There's no doubt about that. It's one of the stronger ones with their network. They got some of the fastest cross-border payment transactions out there, and a lot of companies have been on board with them for a while. Like MoneyGram and big companies back in the day, but with them winning that, well, also, I mean, the floodgate's going to open. I mean, there's no reason why not to invest in them, and why companies won't use their system in the network. So those are some of the big ones. I mean, those are my top, I'd say. I've got some small ones I'm dabbling in. I kind of focus on industries. I'm doing some of the, some gambling, esport related ones. I mentioned NFTs before. There's some NFT, networks I'm working on with like the Central Land and Engine, which just joined Coinbase recently. So I'm not just focusing on one industry within blockchain. It's something that could be applied to every industry, and quite frankly, it is. I mean, as we're speaking, there's people jumping on board with from insurance to finance. I mean, there's so many spaces where this can go. So I'm going to keep on, holding the ones I have and investing as new ones pop up. I mean, there may be a new product that comes out that we don't even know yet. So
yeah, it's so much growth happening now, and with these cryptocurrencies, kind of like the ones that you mentioned with VeChain, Stellar, Cardano, of course, Ethereum. There's a lot of potential here, and I think that even XRP, I believe you mentioned that one as well. It's just sky's the limit, and I think that you have to. A lot of people, I think, the reason why they may be afraid to invest in this space because they don't understand it, and that's how I was at first as well. But I just think that you have to take the time to just educate yourself, ask questions, do the research, listen to the resources that we provided for you, and take some time to take the necessary ability to do the research. So one thing that I did want to also talk on with crypto is very interesting how I read in the news the other day that the Sacramento Kings are thinking about paying their players in Bitcoin. And it's another example. And I know you've seen the article too. I seen you posted on your social media. And I know that so far And when it comes to professional sports, with the NFL, there was an offensive lineman. His name was Russell Okung. He became the first player from any major U.S. sports league to be paid in digital currency, and he converted $13 million of his salary into Bitcoin. So I just think that it's another example of mainstream adoption, and I just wanted to get your take on that as well. Like, what did you think? Like when you seen that, it was a very interesting article. Just hear the owner come out and say he's going to give that option to his players to give them a salary in Bitcoin. Like,
it kind of just hit home. I mean, it really, all these years of me kind of like advocating for it to my friends and family, not pushing it, but just saying, hey, like, just watch where this is going to, where is it going to go? Like, this is something that's new, but just trust me, it's gonna be big. And seeing that, I mean, Sacramento Kings getting paid in Bitcoin. I believe you can buy a suite at the Oakland A's Stadium with Bitcoin. The owner of that stadium came out and said that. MicroStrategies. I mean, Michael came out and said, hey, I'm giving my executives on my board my executives in my company the option to get paid in Bitcoin. Like, and just see that, just like it's kind of crazy. Like, that goes to show you, this whole episode is about the next financial crisis. Bitcoin cryptocurrency is volatile, and it has been. It's dropped over the years. 2017, I was in that drop too. But we're not seeing, there wasn't the adoption back then. There wasn't the investments from financial institutions, the retail investments. Once we're building this base, so that volatility, it can go up and down. Every market does. But we're not going to see the same volatility as we build the network out, and as more people invest in it, as people pull out and move their money or cash in for something else, it won't drop the same. And so, seeing players and athletes be willing to accept Bitcoin over the dollar, which since World War II, it's been on the decline. Something every year it goes down. It's supposed to drop another 20%. And 2020, after this crisis we just had, in this inflationary printing that the Fed is doing, they're saying it's going to drop another 20%. Like, we don't see that every day. We don't look at our bank account. We don't look at the things we buy and overnight be like, hey, this value is not that. But if you look over the historical charts, I mean, it's kind of frightening, to be honest. And so, diversifying your money, I like the U.S. economy, so I support the dollar and the fiat currency. I love the physical investment, but you've got to just be aware that there is risk in that as well, and to think and not see the economics writing on the wall with that. It's just to be aware. These are market cycles. They go up and they go down, and so we're kind of due for one. But cryptocurrency, I think people are waking up to it. I mean, we've got so much investments in there. We've got paychecks. You can pay rent in California. I don't know if you saw that, but a company came out this week saying it's a big real estate firm, and they said, hey, you can pay your rent in Bitcoin if you want. People are just saying this over a guess or speculation. Fidelity or Goldman Sachs, JP Morgan, they're investing and allowing these investments to happen. I mean, we're past that stage of speculation. I mean, it's being adopted and people are accepting it as a form of payment for a reason. Guys that are smarter than you and I, like, let's be honest, like, you got guys like Elon Musk, he's investing in Bitcoin. He's accepting Bitcoin for his Teslas. You can buy a Tesla on Bitcoin. That's not just someone knocking on wood saying, okay, I hope this works out. Like, we're past that stage. We're done with the adoption. We don't. It's just fascinating to see this.
Exactly. I mean, it's examples, is so many examples to just show the value of this technology and what the uses of it is going to be. That it's inevitable. It's already here. It's the future. The future is now. It's happening right before our eyes. And I think that like everything that we're stating in this episode, that preparing for the next financial crisis, this is one way you can hedge with cryptocurrency. And speaking on what you briefly mentioned with the value of the U.S. dollar, I did want to segue and talk about how that's another thing you have to keep in mind when you look at the financial crisis. Everything with the stimulus checks that have been coming out. I know there's been 3 stimulus packages so far. If we talk about the start of the pandemic till now, that when you really look at the history, the purchasing value of our dollar has decreased since the 1900s. I'm actually reading a great book by E.B. Tucker. It's called Why Gold, Why Now? And he's basically throughout the whole entire book of giving a he's trying to encourage investors to prepare for the next financial crisis and giving a reason why you should invest in gold because it is a hedge against inflation. And I think that everything going on with the value of the dollar going down, I think that, having gold and silver is another great hedge. And I wanted to also, get your perspective. When it comes to gold and silver, how do you feel about having those assets in your portfolio physically?
I think that's an excellent store of value.
Yeah.
I kind of grew up, I never came from money, and I just grew up in a, typical middle class family. My
Mhm.
parents always had gold. They always had they had some gold, not saying crazy amounts, but they had some gold just for that what if, you know.
Yep.
Um, and that's, it was kind of passed down through my family that, hey, gold is a great store of value. So I actually went out and bought some 2015 before the 2016 elections. I went out and, bought not a ton, but just, bought some to have. And
Yep.
back then I didn't have much money, so I took what I had and I just moved some of what was in my bank account over to, supply gold.
Yep.
I think it's a great investment. I think silver and gold both. I think silver has maybe a quicker room to grow. It was a lot cheaper and it's gone up a lot in the past X amount of years. They're both used in jewelry, but silver has a application in the medical industry. It has application in electronics, cell phones, devices.
Mhm.
There's use that is not that gold isn't used for, and so I feel like that value can make the precious metals go up as well because electronics that we use, they have components of silver in them. So I would advise people, yeah, definitely, take a look at gold. Um, don't expect maybe a crazy growth immediately. It's one of those things that I bought. It's like 1300 an ounce back in 2015. Today it's at 17, getting close to 18 now,
Yeah.
100.
Yep.
It hasn't been my best investment. I didn't buy it for an investment
Yep.
necessarily to expect some crazy, 3x, 5x return in, a couple of years. That's why I'm investing in stocks and cryptos and even some real estate. But it's just a great store value. It's going to be what it is. The price is not going to go probably any lower at this point in time.
Yeah.
It's scarcity. Um, and so I think that physically own some gold, or also, maybe look at some ETFs. There's
Yep.
some great gold and silver ETFs out there to invest in because even in a downturn in the market, if the dollar drops and the market starts to crash or dip, those are tethered to the price of gold and silver, and so those can still conversely go the other way against the rest of the market. So, if you can't go out there and buy a physical piece of gold or an X amount of ounces, I would definitely look at some of the stocks that may be correlated to that.
Yeah, and I think too, when I think about gold and silver, with it being a hedge against inflation, you have to really understand like what that means as an investor. And the price of gold and silver increases when the cost of living increases, and then if there also is a higher increase in expenses and a decrease in the purchasing value of money, that's what leads to inflation, and a lot of that is currently happening now. I can definitely say $1,000 10, 15 years ago compared to the value of it now is a major difference. And I think that we are going to see an increase here with taxes and inflation, and it's a great insurance policy. It's great to have defense as well as offense. As an investor, you always hear the term defense wins championships, and I believe when it comes to investing, you want to have great defense and you also want to have great offense. So I think that when you look at gold and silver, especially what's happening now, it's very important. So I couldn't agree more. I
Yeah,
definitely.
and part of that, you don't want everything tied to one asset class. We don't have pensions anymore. You and I we're kind of past the pension era, probably for a good thing, a good reason.
Yeah.
But we got our 401ks, we got our stock portfolios, and what we have in the bank. And so you
Hmm.
think about that, that's all tied to the USD, the dollar. And so
Hmm.
when it's affected, it affects your entire portfolio. And so
Hmm.
gold, cryptos, and even physical real estate is a great way to just, kind of store your money in something else. The value's still there. It's those can jump too up and down, but
Mhm.
it's a great way to not just have all your eggs in one basket when it comes to your financial future. So I agree with you 100% on that.
Yeah, and I guess just one last point that I did also want to express is that a lot of people don't realize that gold can also provide deflation protection. And deflation is essentially when prices decrease, when business activity slows down, which a lot of that did happen during the pandemic. A lot of things are starting to reopen, but prices haven't been too skyrocketed at the moment. But also is when the economy is burdened by excessive debt. So that's another thing that I look at as well with being an investor in gold and silver. And when I was just looking at some statistics online, I was able to find that, the US public debt right now is at 27.9 trillion. And it's over 4.49 trillion more than the year previously. In 2020, it was around 23.4 trillion. So as I'm seeing debt starting to become more excessive, that's another red flag that I can see that there's going to be a correction happening sometime here in the future. And for those of you that may not know what public debt is, it's essentially the outstanding debt that is owed by the federal government. So it's a great indicator to pay attention to, because it's one thing that I look at as an investor with being able to manage my assets accordingly. So I think, man, with the excessive debt, that's another thing as an investor you got to be aware of. I mean, you talk about student loan debt, you talk about credit card debt, mortgage debt. The America's in a lot of debt when you think about everything, the totality of everything. So
Yeah, and the money's going to come from somewhere, whether it's raising taxes, if it's, maybe capital gains taxes on your portfolios. The money has to come from somewhere. And so at some point in time, it's going to affect you or I, our paychecks, our money, our investments. And so, it's smart to that total debt thing. That's no joke. And there's actually down the street from me in Union Square, there's a debt calculator that's constantly, it's there. It's constantly going up and up, and you see it. It's on the side of the building. It's big red, numbers, and it's keeping track of our debt. So it's kind of like I walk by it sometimes. I see it. I'm like, it's kind of scary to see. That thing's it's not staying still at any point. It's not going down at any point. It's just cycling through those digits, and from hundreds to thousands to cents. It's just going up and up. It's crazy to see. And so this past year did a number on us. I mean, this epidemic. Let's be honest. Like, we printed more money this past year than we printed in the last decade. They said, and so something to be cognizant of for sure.
Yeah, it is. And I kind of wanted to get into a conversation with your experiences with real estate. I know you are a multifamily real estate investor, and I kind of wanted to understand, like, how was it with you finding that property, and what are the units on it, what's the location, how was that process when you first got into real estate with the multifamilies?
Yeah. So like I said before, my dad was in real estate growing up. He's the one I looked up to. I liked what he was doing. Him and my uncle, business partners. They were, out flipping houses, going to bank auctions or foreclosures, buying them for dirt cheap. The market was way different than it is now. I mean, you can get a house for $10,000, $15,000. Throw 5, 10 into it, cosmetics, maybe update the kitchen, the bathroom, and then at that point in time, it was getting a little hot. So you probably sell it for 40, 50, 60, and they had multiple houses going at the same time. So I always admired that. I was like, I want to either flip houses or do the BRRR method, where buy, rehab, renovate, refinance, and then rent it. And so for me, that was, I thought, I'm busy. I'm in I'm in New York City now, in Manhattan. Obviously, this market can't really afford or want to buy houses here long term.
Yeah.
I don't expect to see myself here, forever. And so that 3 to 4 year plan, I'm like, where should I put my money? I want to put it back in the Midwest, in Cincinnati, which is still a pretty hot market. And so prior to all this, I was, I was saving up my money on the side through my job, which, as I worked up the corporate ladder, I had a little more money coming in. And as I said before, side hustles, I used to Uber on the weekends sometimes, just to make a couple $100. I went to P&G, Procter and Gamble. They had studies there. You could sign up to do like a shave study in the morning. They pay you, $5,200. And so I found ways to make more money just to save up for, my investments. And so in 2018, a year before moving out here to New York City, I bought a house. You might think, why would you buy a house? You're about to move to New York City, or move somewhere in the sales field. I bought it because I knew I could do it as an owner occupied my first year. It's a multifamily, so it was a two family. First floor is one unit, 2 and 3 were connected, a 3-story property, and it was in kind of an up and coming neighborhood. So I saw that the city was taking this neighborhood and transforming it. I mean, we saw breweries coming in, restaurants, bars. They were knocking down houses, building new apartments and condos, flipping left and right. But it was still like, it wasn't there yet. So I saw the appreciation going up quickly. So I bought it in 2018, not just for that reason, but also the city put a tax abatement on the entire area. So any property that you bought that, someone put money into, invested in, appreciated the value and rehabs, they would give you this 10-year abatement. And so I ran the numbers I looked all over the city, the Ohio side, Kentucky side, and I saw, hey, this property is like, it's a multifamily. I'm getting, I'm going to get a 10-year tax abatement. I estimated my cash flows, pulled estimate rents, and kind of looked at all the aspects of it. And I saw, okay, this is not just an area that's at the top that could be declining or stay flat. This is a highly appreciating area. So I bought it. I moved in. My buddy called me a couple months later. He's like, me and my girlfriend are breaking up. He's like, can I move in? I said, well, I have, the upstairs unit, but it's 2 and 3 units combined. You're one person. I was gonna rent it out to a group of, 3-4 people. But it was an easy conversion. I bought it with hopes of eventually converting to a 3-family because the way it's set up, you got a back staircase that goes up, and then 1 door, but 2 doorways when you walk in. And so I said, okay, you can move in, but I'm gonna have to quickly convert this. I wanted to anyways. I was planning on doing it at some point in time, but we weren't there yet. And so my dad and I went in there and just moved the doors around, put up 2 doors so that we separated 2 and 3, making it separate units. And the upstairs had a separate, it had a separate bathroom, had the wash and dryer hookups, and even had an area that was all tile for a kitchen. So it had a kitchen area set up. They knew that somebody might do this. They just didn't install the cabinets, the fridge, the stove. So really, I got lucky. I wanted to increase my cash flows on this property and kind of diversify my risk if I did lose a big tenant in the middle that would have impacted my cash flows. Now I have 3 that can, decrease risk on vacancies. And so converted that, and my buddy, him moving in kind of spurred me to do it quicker than I probably would have otherwise. But yeah, then I had the middle unit that I rented out quickly to 2 other people, 2 college kids that went to Xavier University down the road. And I didn't basically pay a mortgage past that. I mean, I paid, I think my down payment and then my first mortgage. My friend moved in. I was, still owing a little bit. And then once those 2 tenants moved in the middle, I mean, I haven't touched a payment since. And so, real estate is it's a great way to have your money. For one, it's in this investment that is appreciating.
Yeah.
It's deriving cash flows. And it's also just, a way to supplement my income. I mean, I bought that property, moved to New York City in February 2019, and that property was paying for a good portion of my rent in New York City, stuff like that. So, you can't beat that. I mean, I'm in one of the most expensive cities in the country.
Yeah.
And my company's paying me to be out here. So I got the cost of living adjustment, the bonus adjustment, all that stuff for opening up New York. But, I got a property back home in Cincinnati that's paying for my, a good portion of my rent in New York. So to me, it wasn't a single family home that I was going to live in and just, take on that debt as not a true investment. This was something that I was hoping to just turn into a cash flow opportunity. And hopefully, I'm looking at properties now. I was going to buy one in 2020 because of the rates during the pandemic. But, every couple of years, I'm planning on buying one because of the cash flows from that current property, use that money towards the next down payment, and scale that, one by one, and then hopefully get to the point where it snowballs. I'm buying, a couple here and there and just having, property manager come in and handle it. As of now, my dad's helping me because he's got a apartment building, a couple houses. He's been in the game for a while, and so I kind of looked up to him, and he's helping me with, anything that might come up with a fix or, some kind of maintenance thing. It's pretty much ready to go because it was renovated before I bought it. I can't take credit for it. I didn't do the house hack and the rehab. I was too busy with my job and traveling for work. But I got it at a price point that made sense. And since then, it's appreciated like $50,000. And I get calls left and right for investment companies to buy it from me, because they can see they know the cash flows in that area, where it's going. But the biggest part of that for me was the tax abatement.
Yep.
The city gave me a tax abatement on this property, not the current value. It went back to the original value of the home before it was renovated, which was absolutely like nothing at that point in time. So, a tax abatement alone is going to save me 30, 40 grand over the course of the next 10 years.
Yeah.
It's just smart. No, I was going to say, yeah, there's just ways that strategically find a property. It could be a good area. It could be one that's up and coming. It could be one that has, kind of low rents right now, but you think is going to increase, whether it's, attractive because of what's coming in. It could be businesses or companies, restaurants, whatever. But for me, I saw all three things. I saw the cash flow, I saw the abatement, and I saw the appreciation. And so that's why I picked that neighborhood, and kind of specifically highlighted that.
Yeah, that was a solid criteria. When you think about the appreciation, the tax abasement, and then also just the location, you were able to find what was going to work with your numbers, and you were able to profit off of it. And I think that another lesson that I just took out of just listening to you is really how important cash flow matters. I think that as a real estate investor, Grant Cardone said something that really stood out to me. And he talked about how you don't want to really just have one door. You don't want to have more just a single family, because the cash flow isn't there. What do you do if the tenant, for whatever reason, can't pay the rent? With everything happening with the pandemic, there were a lot of landlords that weren't probably able to pay certain things, or that maybe they had to come out of pocket to pay because their tenant couldn't pay. And I think with the multifamily, you're such in a great position because, if you having 3 or 4 people in the place, you're essentially living for free. And, if something were to happen, if one of the tenants couldn't pay, you still are going to be in a good position where that's diversification in itself. You don't have all of your eggs on one tenant. You have it in 4 different tenants that live in the same property. So, I'm working on the same journey as well, man. My intentions is to get a 2 to 4 unit multifamily property and essentially live for free. Either I'm going to live there or I'll live in a different location and don't have to pay rent, because I think that is one of the largest expenses that we have. And if you can get that down where you don't have to worry about that, that's the biggest goal for me, not having to live for free. And I did want to get your approach on, so was the property, I know that you said you were saving to pay on it. So did you save, was it 20% and you paid it off in a couple of years? Or was it more of a financing where you took out a loan and then you put a down payment on a multifamily? How was the financials on that as far as with purchasing the property?
Yeah, so it was owner occupied in my situation. Typically, if you buy a commercial property or a property that you're not going to live in, it's normally that 20 to 25% range on a down payment. Since I'm a first-time home buyer, I didn't utilize the FHA, but I just went conventional, and I was able to put 5% down. So I utilized, some debt leverage, but it's not that, it's not like it's expense that I'm paying on. For me, it's, I'm paying on it my mortgage, but my tenants are covering my mortgage.
Yeah.
They're covering the insurance, they're covering the property taxes. It's still cash flowing and netting a nice, healthy amount of money. And so, buying your first property as a multifamily, like you mentioned, that's a great idea. You get even a two. A 2 should cover, I don't know, rents necessarily in Florida compared to where I live.
Well, it's not as expensive as New York.
No,
but I would say two bedroom here is about 1,600. A 1 bedroom is like 1,000.
See, that's good. That's even more than Cincinnati. So that's a little That's a little higher than Cincinnati. I mean,
Yeah.
that's your mortgage with the rates right now, and I'm sure you got great, great credentials. You can get a nice healthy rate, even get just a two family, not even a four, and that other tenant should be paying most of your mortgage in that situation,
Yeah.
and you'll live mostly free. And then you just scale that up. You get two extra bedrooms, two extra units. If you get a four family, that thing's cash flowing nicely. So
Hmm.
um, back to starting out with your first home. I mean, 5% down, that's nothing. And this day and age, 25% for a commercial, that's a little different. So
Yeah.
I didn't buy it outright. I just bought it with a nice bank note. I walked in a nice rate, and I may speed up and accelerate that payment. I've got the money coming in. I could put more towards it and pay it off in half the time if I wanted to, based off cash flows. But I know Grant Cardone's big about leveraging debt, and so
Yeah.
I follow his stuff as well. I've read his books. I think that's a way that for me, for now, I'm just going to keep it cash flowing and then use that money for the next property and just keep on scaling that.
That's
And then when I get to that point where I have a portfolio that I feel like I'm good at, I'm just going to maybe just pay them down quicker and kind of assess that financial situation at that moment.
Yeah, no, that's smart. And so you said it was only 5% that you had to pay down on the commercial. So I'm wondering to get it, because I know you said if it's owner occupied, if it's a conventional loan, you have to pay. Typically, your down payment is anywhere from 20, it could be 25%. So how do you get it down for it to be like 5%? Was it? I guess I'm trying to understand that a little bit more. How was you able to kind of get it down to that for with the 5%?
It's residential. You can get that low. I'm not sure everybody's approved for maybe 5%. It might be 7 or 10, but you can actually get that low. I mean, those FHA loans, those can get down to 3.5%
Yeah, three and a half.
as a first time buyer. So for me, it's my first home. I'm a resident. It's my property. I live there, so they count it as my primary home, and so that's
Yeah,
why it was 5%.
I see what you're saying. Yeah, because I know with the FHA you can do 3.5%, and you're saying that when you did the 5%, you didn't necessarily pay it off right at the beat. Like it's not a paid off property. You put the 5% in, and you're just getting the cash flow, and you're kind of slowly putting payments on it, but you're not really. I understand what you're saying now. You're not exactly pressed on paying it down because you're potentially going to use the cash flow to purchase your next set of whatever multifamily or the expanding the portfolio from there. Is that correct? Am I understanding you correctly?
That's correct. And that was my first approach because I knew for me, I wanted a cash flowing property.
Yeah.
And the biggest cash flow I could have. So
Hmm.
longest term and the best rate I can get. I could have put more towards it per month, but I knew my tenants were going to pay for it no matter what,
Yeah.
based off my financial estimates on this property. And so it was a good way to just take that because I wanted to cash flow it so I could buy another one and buy another one. Now I may come in with a different rate and a different structure for the loan. But for that first one, I wanted to have enough, leverage as possible to have the most money coming in to buy the next property or pay for my rent in New York. Um, and not have to worry. Cause I'm not paying on it anyways. What does it matter if I'm paying $1,300 or $1,000 a month, towards that mortgage? I'd
Yeah.
rather have the more money coming in just so I can, I'm not. It's not expense coming out of my pocket. It's an asset, not a liability at this point.
Yeah, that's
So
smart. That's smart. I see what you're saying now. That's a great strategy, man. I'm definitely. I can't wait. I'm going to be conversating with you as I get closer to purchasing. Putting the down payment down on the multifamily because I mean, real estate, man, it's another asset that you should have in your portfolio, and it provides that cash flow for you, the appreciation. It's a lot of great tax incentives as well. So I definitely think that you have to have that in your portfolio as well. So I appreciate you sharing that experience as well. And as we're coming to a close, kind of some of the last couple things here that I wanted to ask you is like, what advice would you give to an investor on either a concept or something that you didn't know when you first got started? And this can be in any of the assets that we talked about throughout this episode, but like what were some things at first that you wish you would have known that you would tell somebody now that you should have known when you first got started?
the biggest one for me, and it's probably my most look back upon regret, is just not getting in sooner. I mean,
Yeah.
I was buying, Apple stocks back in the day, and like some stuff here and there, but there were stocks that I knew that,
Let's
I
go.
mean, I remember my cousin telling me in college, buy Netflix, buy Netflix, buy Netflix. And back then it's a movie. You go to the box, you put your credit card or your cash, and it pops out the movie. That was Netflix. You're
Yeah.
like, buy it, buy it. And so, they're just missing those opportunities and not jumping in sooner, whether it was $1,000 or $10,000. Just getting started is just key. It's not something that you have to put a crazy amount of money. You don't have to compare yourself to anybody else. Just
Yeah.
just start dabbling in it, start learning and researching, but investing proactively on a monthly or bi-monthly basis is what I advise. There's things that I saw. I remember seeing Shopify at $27 and it broke, what's it, 1,500, 1,200 now. I mean, there's
Yeah.
just stuff that I knew that was going to be Tesla. I was watching Tesla from inception, like when it was, 30, 40, $50, stuff like that. I mean, there's just, and then you see it go up and you're like, well, it's too late now. I let it drop back down before I get back in. Next thing you know it, it's just the biggest advice is just learn, research. I made mistakes. I've lost money on certain stocks and I've, made some financial mistakes, but everything I've learned from it, I mean, I'm always learning every day, whether it's reading about the real estate market, learning about cryptos, learning about the stock market, certain specific stocks. Just get out there and just research. There's never a good time. I'd say you're never gonna have all the money you want to put in. You're never gonna have all the time to sit down and know it all. But just every day, just proactively find, read books, podcasts. You mentioned that old book you're reading. There's just so many resources at our fingertips. We have the internet, in our phones that we just pick up and literally just every day, just get on CNBC.com or Investopedia. Just read what they have. Market watch. Just get out there and start reading. That's the best advice I have.
Yeah, I would voice the same opinion. I would say for me, it was not getting started, earlier enough. I think in my undergrad days, I was more focused on just acquiring like liabilities, like clothes, shoes. But at that time, I really wasn't a heavy investor. And I graduated in 2015. I was in undergrad from 2011 to 2015. So I know exactly what you mean with Netflix. Right before that point, before I went to college, I mean, the stock probably was somewhere around maybe 50, $100, around 2010, 2011, maybe a little bit cheaper. And to see it now, to see how it has skyrocketed, I definitely would think, man, like, if you're a younger person listening to this right now, get started, do the research. And I also would say another advice for me is really understanding capital gains tax. Because when I first started, like I was just buying stocks and selling them and thinking that I can just take this out as a savings account, but didn't really have the interpretation of understanding, okay, if I hold this longer than a year, I'm going to have a way smaller tax on this if I do decide to pull it, and to do whatever with it. So I definitely think taxes, when it comes to capital gains, have some understanding with that, because I mean, tons of Robinhood traders, all types that just think that their accounts are just, they can pull money out. And it's like, you got to understand that, be smart, understand that you want to be a long-term investor first, and holding for 20, 30 years. I know that's not the best. That's not the thing that everyone wants to hear. But over time, you're going to see your gains grow substantially, and you're going to be happy. So that's some advice too that I would say. And I guess the last question here that I want to ask is, like, how can the viewers connect with you on social media and learn more about you?
Okay, yeah. So I've got I'll look up real quick because I don't know it. There it is.
Yeah.
Twitter. My Twitter is Alex L. Cole, at Alex L. Cole. Pretty generic, I know. And then my Instagram is the Alex Cole, like the Ohio State University. But at that time, that's what was available, so I picked that. So those are probably the two most active platforms I'm on. I'm on Facebook, LinkedIn, a little bit on YouTube too. So there's other options, but those are probably the best way to connect with me. But yeah, no, that good point at the end, Kevin. I mean, tax liability, that's huge. Everybody wants to be a day trader. Everyone wants to get on the GameStops and the next, next wave. but you're not. You think you're making all this money, but when it comes tax time,
Mm-hmm.
you know that the non-capital gains tax is crazy. I mean, the capital gains tax is insane if you're not.
Yeah.
It's not ordinary income at that point if you do it less than a year. So
Yeah.
be conscious of that, because I have friends that are cashing out in a couple months, 10,000, 20,000 in stocks. Well, you better believe a good portion of that's going to be gone within
No.
that first year. So you want to withhold that too. You don't want to reinvest it or have it tied up for something else, because that's a hefty tax liability burden come
Yeah.
April. So
Yeah.
that's probably one thing. I didn't know it either. I was trading Forex. I went quickly on that too.
Yeah. No, I agree. I agree. But yeah, man, I appreciate your time, and I did just briefly want to tell the audience, thank you so much for uh, going along with us on this in this video. And if you're listening on a podcast, it's as far as with insightful principles, if you can continue to like, subscribe, share this video, continue to subscribe, rate, leave a review, continue to share this message of financial literacy with your friends. If you took something out of this episode, definitely share it. Definitely reach out to Alex. He's a solid dude. He's always very open to sharing ideas and giving information that he has learned with his investing journey. And then also, I want to tell you all, if you can also subscribe to my Patreon page, where I create exclusive content in the areas of finance, business, and investing. I'll put that in the link tree as well, so you all can be able to connect with me. And Alex, thank you once again. I appreciate your time. This is a great episode.
Yeah, I appreciate it, Kevin.
No
Thank you.
problem. No problem. Well, world, thank you for tuning in to another episode of Insightful Principles, and take care.